Hello, and welcome back to our channel, Top 10s You Should Know. Let me ask you something. Have you ever looked at your bank statement and thought, where is my money even going? You did everything right. You deposited your paycheck, paid your bills, saved a little, and yet, somehow, your money just disappears. Well, friend, it might not be you. It might be your bank. Banks have mastered the art of appearing helpful while hiding costly traps in plain sight. These aren't illegal moves, but they are designed to quietly drain your money over time. And today, I'm going to reveal the top 10 bank secrets that are costing you thousands over time. If you've ever felt like you're losing money and don't know why, you need to hear this. Let's begin. 1. Monthly maintenance fees that punish low balances. Let's start with one of the sneakiest charges, the so-called maintenance or service fees. These are usually around $10 to $25 a month, and they often hit you just for having a checking account. What's worse? They usually apply when your balance drops below a certain amount. So, in a strange twist, the less money you have, the more you get charged. It's like kicking you when you're down. Banks justify this by claiming it covers the cost of servicing your account. But let's be real. In a world of automation and online banking, this is pure profit. And over the course of a year, that tiny $12 monthly fee adds up to $144. Multiply that over 5 years, and it's $720. Gone. And that's assuming it doesn't bounce into overdraft territory. Always check the fine print and ask your bank about no-fee accounts. Many offer them if you meet specific criteria, like setting up direct deposit. But here's the catch. They won't tell you unless you ask. 2. Overdraft protection that isn't really protection. The name overdraft protection sounds comforting, right? Like the bank is looking out for you. But what they don't tell you is this. Overdraft protection actually allows your card to be accepted even when you don't have enough money, so they can charge you an overdraft fee. You swipe your card for a $5 coffee, and boom, a $35 overdraft fee appears. Do that a few times in a day, and suddenly you've racked up $100 in charges on just $15 worth of purchases. And here's the thing. Many banks enroll you by default. They won't always ask you if you want this protection. The good news? You can opt out. Without it, your card will simply be declined if your funds are too low. No fee, no drama. So ask yourself, would you rather face the brief embarrassment of a declined transaction or pay $35 for a sandwich? This so-called protection is one of the most profitable tricks in the banking playbook. 3. High-interest credit cards offered. First, have you ever noticed how banks push their credit cards at every opportunity? Whether it's online, in person, or through the mail, they make it sound like they're doing you a favor. You've been pre-approved. What they don't mention is that these cards often come with interest rates of 18%, 22%, or even higher. That's astronomical. They offer the flashy rewards, the welcome bonuses, but don't highlight the long-term cost if you ever carry a balance. And let's be honest, many people do. That free flight from Travel Points could actually cost you hundreds in interest. Banks make billions from credit card interest. So of course, they offer those cards first, not the ones with the best terms. Always shop around. Use comparison tools. Check your credit score, and only accept cards with low APR and zero annual fees if possible. Don't let convenience turn into a cash drain. 4. Minimum payments that trap you in debt. Let's talk about credit card minimum payments. Banks make it seem like paying the minimum is responsible. It's not. It's a trap. When you see minimum due, $35, you might feel relief. Whew, I paid something. But here's the problem. That minimum usually barely covers the interest. The balance hardly moves. You could end up paying off a $2,000 balance for years and spend more than double the original amount, thanks to compounding interest. The bank wins. You lose. Every time. They design it this way because long-term debt makes them more money. They don't want you to pay off your card quickly. So while paying the minimum avoids penalties, it doesn't get you out of debt. Make it a rule. Always pay more than the minimum. Even a little extra can save you thousands over time. 5. Low savings interest rates that kill your growth. Remember when banks used to promote savings accounts with a big smile and say, start saving today? What they don't mention is that your interest rate is often so low. We're talking 0.01% to 0.05%, that your money is practically standing still. Meanwhile, inflation is around 3 to 6%, which means your savings are actually losing value every year. That $1,000 you saved last year, it's worth less now. Banks use your money to invest, lend, and grow their profits, but they give you crumbs in return. Online banks and high-yield savings accounts are game changers here. Some offer 4% plus interest, and they're just as safe. Don't let loyalty cost you growth. Your money should work as hard as you do. 6. Hidden foreign transaction fees that drain travel budgets. Imagine you're on vacation, sipping coffee in Paris, buying souvenirs in Tokyo, or grabbing street food in Thailand. You swipe your card like usual, thinking, it's all covered. But when you get back home and check your bank statement, surprise, every single transaction has a mysterious 2 to 3% fee attached. That's the foreign transaction fee, and most banks don't make it obvious. It doesn't show up as a big alert. It's just tucked quietly into every payment you make abroad. That might not seem like much on a $5 coffee, but it adds up fast, especially if you travel frequently or spend large amounts. Worse yet, these fees also apply to online purchases from international retailers. So even if you're shopping from home, you might still be getting charged without realizing it. The fix? Look for cards that have no foreign transaction fees. Many travel or online banks offer them, but they won't be the first options your bank promotes. Why? Because those quiet little fees are pure profit. So if you plan to travel or even just buy products from international sites, double-check your card's terms. A few percentage points may not feel like a big deal until they start quietly draining your adventures. 7. Free checking. That isn't really free. Ah yes, free checking. It sounds like the perfect deal. No monthly fee, no minimums, no worries. But wait, look closer. Banks often advertise free accounts with big banners and friendly smiles, but there's usually a string attached. Maybe you need to keep a daily balance of $1,500, or you need to set up direct deposit. Or you're allowed only a limited number of withdrawals or transfers before they hit you with a convenience or activity fee. It's like buying an all-you-can-eat buffet, but then being told drinks cost extra. The point is, nothing is truly free unless it comes without conditions. And sadly, most free accounts have hidden traps. The good news? There are truly free accounts out there, mostly with online banks or credit unions, and they're usually more transparent. They don't rely on tricky fine print because they want to earn your trust. So next time you hear free, pause, ask questions, read the fine print, because banks are banking on the fact that you won't. Number 8, account dormancy fees that punish you for forgetting. Let's say you opened a savings account a few years ago. Maybe it was for a vacation, a special project, or just a backup. You haven't touched it in a while, but it's still there. Safe, right? Not necessarily. Banks often charge inactivity or dormancy fees, monthly deductions that kick in after 6 to 12 months of no activity. It's like being penalized for not using your own money. And most people don't notice until the account is nearly empty or already closed. That $200 you set aside might silently drain to zero just because you didn't touch it. You'd think banks would thank you for leaving money with them. Instead, they punish you. The fix is simple but critical. Log into all your accounts every few months. Make small transactions, even just transferring $1 in or out. Or better yet, close unused accounts and consolidate your savings into one high-yield option. Your money should never be punished for staying put. Number 9, complicated fee structures that keep you guessing. Ever tried reading a bank's fee schedule? It's like decoding ancient scrolls. They use vague terms like non-sufficient funds, excess transaction fees, account research fees, stop payment charges. The list goes on. And what's worse? These charges often apply in situations you'd never expect. For example, transferring too many times between accounts? That might cost you. Asking for a printed statement? That could be $2 or more. Calling customer support for a wire transfer? That's another hidden charge. The complexity is intentional. Banks know that when something is hard to understand, most people just give up trying. And in that confusion, they profit. The solution? Take a deep breath and go fee hunting. Look up your bank's full schedule of charges. Bookmark it. Ask a representative to explain it in plain English. And if your bank makes it hard to find, that's a red flag. Transparency shouldn't be this rare, because at the end of the day, it's your money, and you deserve to know exactly how it's being managed. 10. Banks rely on your financial insecurity. Let's end with something a little deeper. Banks are businesses. They are not financial mentors. And while they may offer tools to help, their core profits come from your financial stress. Think about it. They make money when you overdraft, when you pay late, when you carry debt, when you forget, when you struggle. They create the illusion of support while profiting off your mistakes. This isn't to say all banks are evil, but you need to know the game you're playing. Because once you do, you can take control. Move to banks that reward good habits. Use apps that send real-time alerts. Set up automatic payments and learn to think like a banker, not just bank with one. Financial peace comes not from having more, but from losing less to the system. Know the rules, and then play smarter. So there you have it, the top 10 bank secrets that cost you thousands over time. Some were sneaky, some were frustrating, but all of them, very real. And now, they're no longer secrets. So let me ask you, which of these hit you the hardest? Have you ever been caught off guard by one of these tricks? Share your thoughts in the comments. We'd love to hear your story. Don't forget to like, share, and subscribe to Top 10s You Should Know for more financial truth bombs just like this.